Baseline's a fantastic company that I've been using for a while now, and all my students have been using for quite a while. And working with Baseline has just been super terrific because all of our audience, students, everybody, I've worked out with Baseline that if you joined, you get $100 just for joining, which is pretty amazing. But then also you get free premium support. And the great thing that I've loved about Baseline is because I got to get rid of like three or four different companies or software and banking and all that sort of stuff, put it all into one, which has been super time saving. And I love and I can't wait for Assad. He's going to share all this with you. But the AI that they're also implementing for accounting is going to be really, really cool. Now, obviously, you got to check everything. You can't just trust AI 100%. But in the end, what I've seen is that Baseline has just made everything so much more efficient. In fact, my daughter, she's 16 years old. My oldest daughter just bought her first property 3 months ago. And so I taught
Amazing.
her how to use Baseline. She gets all of our properties information, puts everything inside of Baseline, does all the accounting for me, and she does all the work. And so if my daughter can do it, and honestly, if I could do it, my daughter's much smarter than me. If I could do it, you could do it. And then at the same time, using Baseline has just been super tremendous way for me and my business to become more efficient. But I have a great company, Baselane, partnering here with Master Passive Income so that you guys can have some great services. But we have Saad on. I've known him for a number of years now, sponsored the first RubeCon that we had, and now he's here helping everybody with their banking, their property management, and everything. So Saad, I think you should have access. Let me know if you don't have access to anything.
Okay, let me share my video here so everybody can see me. There we go. And we've got some team members on with us in this call, and we're thankful for the invitation and excited to do this training. And I know this is being recorded, so I'm gonna quickly go through. You already talked about baseline. We're gonna focus on the training, and we'll get back to sort of baseline questions if you have any later in the session if we have time. But really, the intent for Baseline is to help you organize your rental finances, run it like a pro, so you have better organization, automation, and the ability to analyze and optimize what you're doing, so we can all achieve our ultimate goal of increasing our rental property portfolios and our cash flows. This training that we're doing today, it's a new training that we've developed. And if you are, new to real estate, I think you're going to learn a lot. If you've already been doing it for a while, you're probably going to be familiar with the concepts, but maybe a good refresher. And if you're more of a pro investor, when we get into some of like the how do you actually implement this, that part is going to be really useful for you. And so I don't know if we have a poll in here, but I'd love to just understand who's in the audience and how many rental properties you have. If you can share that, that'd be great because that'll just help kind of tailor the presentation a bit more. So maybe if you don't mind, go ahead and respond in the chat and let us know how many rental properties you have and if what type of rental, they're short term, long term, so I can contextualize it for you.
And for
Bef-
everybody, go ahead if you have questions, because Saad's going to be presenting. Type your questions in the chat. We'll be monitoring. I'll be checking it out, and then if we can't answer them, we'll have Saad answer them at the end. So also put any questions in the chat.
yeah, totally. And so one thing I'd like to share is that in this training, we're gonna do sort of about 30% concepts, like what is this and what is that, and like just talk about those things. But um, the rest of this training is actually a workshop. So you need your computer and you need to be able to download some spreadsheets that I'm going to be sending you. And when we say financial training, it's an actual training with dummy data that you're going to be using. And we actually have a part where you're going to be actually analyzing stuff with us on Baseline as well. So you should have, access to a computer. You could do it on your phone, but not entirely. So if anybody doesn't have that, please go ahead and set that up because we want you to follow along. You'll get most out of it if you follow along with us and actually do it with us so you can understand like how to make this more practical for you. Awesome. So with that, there's 4 sections to this training. We're going to talk about the a few things. So really, we're calling this our, mastering your rental finances, a blueprint for profit and growth. And The first section is about key metrics, and we wanted to keep this very simple, so I'm really only bringing you two. And so easy to memorize, easy to remember. Then we'll talk about some of the areas that lots of mistakes are made. We see this all the time, and we're sharing it with you now so that you can avoid those mistakes. Um, then we'll go through the Baselane method, and this is where the insights are in terms of like how do you make more revenue, how do you lower your cost. And we're actually going to do an exercise together with a spreadsheet that I'm going to send you in a few minutes. And then we're going to get into sort of a full-on exercise after that about how to analyze real data. It's not your property, but it's real data that we're going to be able to share with you. You're going to create a Baseline account for free, no obligations. Just go in there. We're going to show you how to use the upload to import a bunch of data and then quickly analyze it real time with us. And we're going to do it all together as a team here. Does anybody have any questions before I jump in? And does everybody have a way to do this training with us in terms of like, are you in front of a computer? Are you able to like follow along? Just give us a thumbs up or down on the comments, and we'll keep it moving here. Okay, awesome. So first thing first, when I started investing in real estate, even though I'm a former accountant and I'm also an MBA from Duke, I still read this book. I don't know if you guys can see it. Let me see if I can. Oh, maybe I put my hand on it. No, I can't. Anyway, the book is called, there we go. What Every Real Estate Investor Needs to Know About Cash Flow. So this is also always good to have because when you get into a specific area, you want to know the details and all the metrics. And if you don't have any financial training or you forgot, a lot of us do, really important to do that. Two key metrics that everything boils down to at the end of the day when you're looking at cash flow. One is NOI, which is net operating income, and second is cash on cash return, right? Like how much money are you making and is that return good or bad? The first one, let me know comments or show of hands of some kind that if you know these concepts. I'm going to quickly walk through these and then we're going to do an exercise together. So net operating income is really important because it's giving you an indicator of your profitability for your property. You calculate cap rates off net operating income. You can Google that later. It's an easy calculation, like, in terms of how to calculate a cap rate. And then that directly impacts your property valuation. When we buy a property and we increase the NOI, what happens? The property value should go up, right? All things equal, right? And so what's the formula for net operating income for a long-term rental or a short-term rental? Doesn't really matter. Gross rental income plus any other income that you have. So really your overall annualized income minus your operating expenses. And depending on how you calculate it, technically you should probably take out things like vacancy and credit, losses or anything, any adjustments like that from this. It's very simple. Your overall collections, all the money that you got in, minus, let's say, a vacancy reserve of some kind, minus your operating income for the year. You can do it on a monthly or an annual basis. Cash on cash return is sort of the next part of this. When somebody asks you like, hey, how are your rentals doing? Like, what kind of returns are you getting? The reason they're asking that is because, well, people look at investments based on returns. If you invest in Apple stock or Tesla or Berkshire Hathaway, how much does it return on an annualized basis? How much does it return on 5 years, 10 years, right? Every dollar you're looking at what the return is. And so this is a very simple calculation that all of us can do and remember in our heads and walk around with, which is cash on cash. What is cash on cash? It's your annual pre-tax cash flow. So let's say, I don't know, you collected 40, 50, $60,000 for the year, divided by the total cash that you invested in the deal. Not the loan amount, but your cash commitment in the deal that is, a part of the overall structure of the way you bought this property, times 100. So that's just a calculation to get you to the percentage. So very simple, generally speaking, depending on where you are, these NOIs a couple $100 per month. And then, cash on cash return, you want to be in that sweet spot of at least 8 to 12% cash on cash. That's where you're, getting more than like a federal, bond yield or something like that. And maybe you're even outperforming stock market and things like that, while you're building more assets in real estate. So let us know if you have any questions here, but this is the first part of it. And I'm actually going to go into give you a worksheet. So we're going to do this together Are folks familiar with cash on cash and NOI? I don't know if we got any information on that, but if you are or aren't, let us know in here because the next part is actually doing an exercise together. Yeah, that's great. Yeah, four to 500 is a great target. It really like it depends on your market, depends on the purchase price, depends on your mortgage and your interest rate, right? All those things are important. Okay, so I've got this spreadsheet here I'm going to be sharing. So you're not going to be able to edit this spreadsheet, but you can make a copy of it. So basically for this part of the workshop, what we want you to do is copy this spreadsheet and we're actually going to do a live calculation together. And if there's anybody in the audience that wants to share like a real deal that they've done recently or looking at, we'd love for you to come off the mic and give us numbers, and I can kind of go through it with you live and calculate it together. And does anybody want to do that? I'm looking at some names. I might be cold calling here. We've got Andrew, Brandon, Cindy, Ray, Terry. Does anybody want to volunteer to do a live calculation? And it could be a prospective deal. It doesn't have to be something like you're actively managing. It could be something you purchased recently or something you're looking at. Andrew volunteers. Okay, awesome. Andrew, can we get Andrew off mute?
Hi, can y'all hear me?
Hey, Andrew, how's it going?
Good, good.
Hey, where are you located?
I'm in Fort Worth, Texas. That's where my property is.
Okay,
So
awesome.
just a little bit of backstory, real quick. I own one property, moved out beginning of this year, and so
Okay,
I'm currently in the process of trying to make this a rental.
okay,
I actually was listening to the podcast yesterday, and you were talking about how a lot of people become accidental landlords. I would say that's kind of I'm in that
okay,
boat. Yeah.
awesome. I
So
started the same way. Yeah, that's great.
yeah, but yeah,
Excellent.
whatever
So
numbers
let's
you
do
need, just let me
yeah,
know.
let's do the numbers together. So everybody who's watching, make a copy of this whole spreadsheet and you can use the same numbers we use, or you can use your numbers that you had for your deal. I'm going to go through it fairly quickly, but it's for you to keep, right? There's a lot of other things in here that you can use. So Andrew, go ahead. How much did you buy that property for?
So I bought it for 300K.
Awesome. Okay. Let's just keep the closing costs where they are right now because it's an exercise. Did you do any rehab on it?
Um, so yes and no. I The water heater ended up busting
Okay.
November last year, so I had insurance involved in it and
So
all that
rough
stuff.
numbers, 5,000, 2,000, 10,000. What do you think?
I think it was around 20K. That's what insurance charged me. So
Ooh, okay.
well, like
That's a
I
lot.
didn't pay that. I paid deductible. I paid
Oh,
2,000 deductible, but I think all repairs and everything, that's how much the bill would have come out to had
okay.
I come out of
But you
pocket.
didn't pay that, so that's not coming out
No,
of
no,
that's
no.
not cash. Okay, so you only paid 2,500.
Yeah, I
Okay,
paid 2,000 for the deductible, and that was all I did.
okay, got it. What's the value of the property, ARV?
Hmm. Okay, you're talking to a noob. I really don't know.
So basically, for now, since you did some improvements, we can say
Mhm.
it's 320 because it's $20,000 of improvements plus the 300 purchase price. But if you revalue, it might be worth more depending on what's the situation in the market. But anyway, let's keep going because we don't really need all that. It's just more for the discipline of putting this stuff down that we're doing this so you have everything like locked in and you know what it is.
Okay.
Would you say this is roughly accurate? Like you put in, how much did you put down? 20% for the
So
property?
this was a VA home loan, so I put zero down, and
Very nice. Okay.
yeah,
And your rate?
and the interest rate is a 4.375.
Awesome. And what's your term? 30 year?
It's a 30-year fix, yes.
Excellent. Okay, great loan by the way if you're a VA. Awesome option. Love that. Okay, so is it accurate that you put about 11,000 in?
Uh, I I think 18 closing cost was pretty high for
Okay,
me.
what
So,
was your closing cost?
uh, off the top of my head, I think it was 18. That's what I had to bring to the closing table, about 18K.
Okay, so let's just say you're all in at 20 just for this exercise.
Yeah,
Just
that's
for
fair.
this is your cash invested. Remember, you need that for your cash on cash return number. Okay, that's why we just did this. Awesome. Now I'm gonna move to the next part of this. Okay, so let's go through the rents, Andrew. How much is the rent?
I plan to charge 2,100.
Okay. I'm gonna leave the 5% vacancy reserve there. Always a good practice to do this, right? Because you never know.
Mm-hmm.
What's the property tax?
Property tax. Oh man. I'd have to like actually like check, but
Rough numbers. 5,000,
I'm
10,000,
gonna
3,000,
say for the year, I think it's 2,200. I think.
2,200. Okay.
Yeah.
Insurance.
Insurance for the year is about the same. It's about 2,300, 2,200 around there.
Okay. Let's say 300 to be conservative. Are you gonna use property management or self-manage?
Self manage.
Okay, that's 0 for now. Maintenance reserve,
Yeah. So I wanted to do, I guess like the good 5%.
5%. So for you, I can do like a calculation here, but 5% of basically your rent amount, right? That's what you're looking at.
Right.
That's fair. I like that. That's conservative. Okay, so about $100. Do you have an HOA? Are you paying utilities?
Yeah, so HOA, I mean, I do plan to keep on paying it, but like myself, but included in the rent, you know. So
Okay,
HOA is I think 37 bucks a month. It charges me quarterly though. It's like
that's fine.
143,
Yeah.
145.
Okay, so 37. Okay, and utilities, you're paying the utilities or the renter would pay?
No, no, no. That's gonna be
Okay.
for the renter.
Do you do any sort of emergency fund additional capex reserve, like for another thing that might fail if it's older in that property?
Yeah, I wanted to put like a good like another 5% for that, honestly.
5%. Okay, so about another 100. Let's just say $100. Okay, awesome. So what did we just do there? We calculated, I mean, obviously this is a projection, right? So we calculated the total rents. We got all the costs here added up per month, and then we have our NOI. Very simple, right? Net operating income of $1,378. Annualized, it's about $17,000 for the year. There's a bunch of descriptions in here in the spreadsheet. We'll talk more about how you can optimize all these things in terms of how to maximize your rent. We actually have a really cool rental calculator on our website you can use to benchmark how much rent you should charge. I actually didn't even think about that, but it's on here. If you go to resources and go to calculators, it's right here, price or rentals, for example. You can check that out. And that helps you like just benchmark what you should charge. But everything else looks good here. You can get a quote from Obi in a few minutes. That'll help you get your insurance and things like that. But it's here. You can take a look at it later.
Quick
So we
question
have
for
our
you,
NOI.
Saad,
Yeah,
because yeah, definitely having a good rental amount is going to help to make sure you're running your numbers right. Where do you guys get that information? Where do you pull that information in?
this is based off an API that we built with Rent-A-Meter. So Rent-A-Meter has a lot of really good data, live, real data. And then basically this is a calculator that I built about 2 years ago that helps you price your rental. You have to enter a piece of information. So you can go to Zillow and do that stuff, like benchmark it there. You can ask a realtor, but you can also go here. This is like real rental property data of amounts that are rented. And it'll give you the median, the average, the 25th percentile, and the 75th
Yeah,
percentile.
Rent-A-Meter is pretty good.
Yeah, good question. So now we have our NOI and just finishing this exercise for cash on cash. Um, let's take a look here. So basically, you are, did we go to the loan? I think the loan calculation is not correct because your loan is excellent. So let me just make sure, what am I doing here? Uh, yeah, there we go. So loan amount is, right. What was your down payment? Did we cover that part of it?
Like for closing,
For
is that
the
what you
for the
mean?
VA loan, like how much money you said 0% down,
Oh,
right?
yeah. I mean, I had to do 0% down, but I think there is some sort of fee. I can't remember what it is, but it's like
Okay.
I guess like an origination fee for the VA loan. That number
Okay.
I don't remember.
I have about 3,000, so let's assume that's what it is because I think the formula was getting tripped. But basically your financing cost, what's your loan amount today? What's the monthly that you would pay? I don't think this calculated correctly.
Right now, my mortgage monthly is, I think it's like 1,800. It's like
Oh, it
40
did.
something, I think, or 30 something. It's like 1830 something around there.
1830. Okay, there might have been something off in the interest rate or something that I messed up here. Oh, I've got 1400. You were saying 18. So maybe there's some numbers are off. Okay.
Yeah.
But okay, so here's what it looks like, right? So your NOI is 1370. Your financing is, I'm calculating 1480. You might be at 1800. So you are going to be in the red with all those reserves that you have here, right? Because you've got $200 plus of reserves. So you're about $100 in the red based on this calculation. And that's why your cash on cash return is negative. So what would you do in that situation?
Like in order to
Like, how can we flip this
be,
around?
uh, could I charge more rent?
That's one way to do it. Yeah, you can, but you have to see if you can actually do that, right? Like, can you
Yeah.
justify the higher rent in that unit based on the benchmarks, based on what your setup is and all of that? That's a super important. That's one of the most important assumptions you made in this model. And the cash on cash return we calculate is basically based off of your, again, if we go back to the formula, annual pre-tax cash flow minus the total cash invested. Right. And so that is coming out right now as we see it's negative because your monthly income is negative. But if you could, for example, I'm just going to do some math here. If you can do something like $2,500 of rent, for example, there you go. Right. Look what happens then. You have about $250 monthly net based off this, and your cash on cash return is 15%, right? Which is a decent cash on cash. So the
Yeah, that's
question you have to answer is going to be like, how do you get that 2,500 or more? And that might require you putting more capex into the property, more investment to make it better, nicer, to get the rents up, maybe some more amenities. We're going to get into more of this, but this is a great, segue into the next section. And so we just did a live calculation. Did anybody else follow along? I'm not sure if that worked. Anybody else copy the spreadsheet and try it out with their numbers? Anybody want to comment or let us know if they did that?
I think it's worth
Uh,
playing around. I know, Sahar
yeah,
and I did this a lot when when I was getting my first property. You're not going to see like all positives, or the ROI calculator is really helpful because it shows you when you're in the red. So, but
yeah. And
this is super helpful here too.
I'll
Yeah.
share this with you. So this is the Excel. You can use that, but we also have a rental property calculator that helps you do this on the fly. Like if you're walking around and looking at deals and you want to just be like, hey, I don't remember how to calculate it. If you go to Baselane and resources and rental calculator right here, here's a I actually built this like 4 years ago. It's exactly the Excel sheet. It requires a little bit of like, just getting access. And then here you can enter your amount for the property, what the rents are going to be. If you remember, if we had done like 2,500, about 300K for the property really quick, and boom, like you get some calculations right off the bat, and you can go more deeper if you want to adjust the rate and play with the capex and the monthly expenses and all of that stuff. It's all in here, similar to the spreadsheet, but this is more if you're like on the go and you want to like quickly figure out if this numbers make sense for that deal, and you're not computing in your head. So that's another thing you can do. Another resource that we have here, and we can drop it in the chat here for folks to check out. It's a free resource. So this is the NOI and cash on cash return. Anybody have any questions on this before we move to the next part of this?
Yeah,
I don't know if there's,
when we were
yeah, go
running
ahead.
the example, was that the whole PITI payment, or was it just principal and interest for that 1400 number? Is that factoring
Well,
in taxes
y
and insurance?
the 1400 didn't have the insurance and taxes because if you remember, we had calculated that above with the insurance and the monthly tax.
Oh,
So we had put it in your NOI. If you remember here, property tax. So
yes.
that's probably why yours was 1800 and mine came out to 1400. And so you have property taxes here and insurance already here. And so the NOI is above the line in a way, and the lending comes after, right? So the cost of capital comes after. And that's variable, right? So this is what most investors look at when they're looking at initial returns and also like how to calculate the cap rate. They look at the NOI because your debt cost could be higher, lower, et cetera, based on who you are. And so you don't want to analyze the deal based on that right off the bat. But you do want to incorporate what you're actually going to get with financing and then your returns. I didn't mention this. We have other returns down here you can check out. Some of these are older rules, like the 1% rule, popularized by Bigger Pockets, and the cap rate and things like that. So there's other things you can calculate here that we've built in with some descriptions of what it is. Awesome. Well, Andrew, thanks for participating. Awesome job, and glad that you're in real estate and you sound like you're on top of it. So try to get that rent up, and I think you're gonna have a good deal with that property. But
Quick,
yeah,
yeah,
maybe
quick
Dustin, you
idea,
want to share anything?
Saad.
Yeah,
Andrew, a quick idea is whenever you do get it listed, long term is a great way to make money, but to increase the amount of revenue that you can bring in the form of rent, I mean, you could do a midterm rental. I have one property in Arizona, 2,100 would be the normal rent. I'm getting 3,600 for a midterm rental. Short term is also really, really good. So if you already have the property, there's other ways to increase the amount of rent that you bring in. And so don't think that, oh man, it's not working out. It's not penciling out. Well, let's see if there's other ways. I mean, there's even co-living is turning out to be
totally,
really, really
totally.
exciting
Yeah,
right now. But I just want to throw it in there because you're gonna do well with that property if you figure out the right way to make that revenue come in.
I
yeah. And I
appreciate
see
the advice.
Brandon.
Yeah.
Yeah,
I might
excellent.
be conservative with those numbers too, because like I said, I had like the rehab stuff, so I did get all new flooring throughout the house. I got brand new countertops, like charging a premium. I have washer and dryer.
There you go. Yeah.
Like there are
So
some things that I might just be very conservative about, but
yeah,
I could aim high, and if nobody's biting, lower it.
lower the rent. Yeah, you can
Yeah.
do that too. Absolutely. So yeah, this is one of the recommendations here. I'll come back to this in 1 second. Really quickly, we want to like just ground you guys in this framework that we're providing here, which is organize, automate, analyze, optimize. If you think about how to run your rental business, some of you might be thinking, well, I only have one property, so why do I need this? Right? And then you're gonna call Dustin 3 years later and say, hey, I never did this, and now it's hurting. Or I couldn't scale because I didn't do this. Or I'm not scaling, I don't know what I'm doing wrong. I thought I was doing the right things, and what happened, right? All these scenarios are possible, and so we're kind of giving you the early signal to systematize now and to follow a framework to set yourself up the right way, so that you don't, make the mistakes that a lot of other people are making. So very simple things like don't mismanage your security deposits, right? Like park them in a separate account. Don't wait till the end of the year to do tax preparation and strategy. Do it in the middle of the year. And how do you do that? Well, you have to do your bookkeeping. That's where you want to automate and do your books every month. Well, I only have one rental property. I know how much I make. Well, okay, like what's your NOI at 6 months in? All right. What's your cash on cash return today? Oh, I don't know. Right. And so these are the things I'm seeing, and it's everybody's doing this because they don't have the right systems. It's not one person or, I've been guilty of doing this because we're busy. No process automation in the way you run your operations in terms of how you deal with tenants or how you lease or how you set up your listing or how you answer maintenance, right? And all of those things, how you find new deals, right? The third part is analyze, where we do not want to mix personal and rental and business finances. That's sort of the organizational part. But then when we separate them, how do we analyze it? And that's what we're going to be doing today. And doing better research to make sure that we've got the right setup. For example, we just did this exercise. Now you have to do a lot more research to figure out how to benchmark yourself against the competitors in probably that 5 block radius in that area to figure out how competitive is your unit. You may even have to go see some units to see how good they are and figure out if you can charge more based on that or talk to some real estate agents, right? And then optimize. And so optimizing, I think some of these got mixed up here, but optimizing is all about increasing your revenue and lowering your expenses. There's a bunch of things we have listed here. I won't go through everything, but the one we just did together, we just learned some metrics, but we also talked about how to raise the rent with some strategies that Dustin just shared, right? In terms of MTR or co-living, for example. But you just mentioned that you did a bunch of upgrades. Now, is your unit better than the rest? Have you seen that? new kitchens, new bathrooms, new flooring, right? New windows, maybe, fresh coat of paint, et cetera, et cetera. Maybe yours looks more modern. Maybe yours is in a better part of the block, closer to transportation. So that's really important. Lease renewals with rent increase. So as you're renewing leases, raising the rent is another common way to do this. Another one that's kind of passive, but if you have money sitting aside, you can earn high APY in Baselane savings accounts, which pays about 3.5% today. Reducing vacancies by lowering your churn, in terms of number of tenants that are switching from your unit to somewhere else. Charging automatic late fees. This is a big one where if you're not collecting rent online, if you're using Zelle and Venmo, you won't be doing this. And then you get behind and you will miss out on late fee revenues because you weren't charging automatically, for example. And there's a bunch of other things like giving your tenants incentives to renew with you, getting referrals from existing tenants, adding extra amenities that increase your ability to charge more money, like storage space, for example, or laundry services, or parking, right? Making upgrades that may seem minor to you, but actually increase the rents. So we talked a little bit about that already, like a smart home thermostat looks fancy on an online listing, right? And Nest costs like less than $200 to install, for example. There's a lot more in there if you go into short-term, mid-term rentals, but these are just some ideas to get you started. And then on lowering expenses, obviously debt is a huge part. And how do you, lower your rate? That's super important. That's something that we, work on as well with our customers in terms of like finding options for you through our partners. There's other things like negotiating rates. We've got built-in real-time insurance rates you can get to figure out if you can save some money. If you get a tax assessment, appealing that tax assessment and other things like this down the line. Here's a big one that I made a mistake on: thermostat. Not controlling my thermostats in my midterm and short term, having crazy utility bills and realizing I should be controlling them and automating them and having an app to control it centrally. Regular maintenance to prevent major repairs down the road, and some other things. And so this is what we're really talking about: is that all of these things, and not doing these things is going to cost you. And when we say 10K, we actually mean it, because it may be like, oh no, I'm not going to lose that much money, but what we're seeing based on our research is that people are losing that money because they're not doing these things and they're not automating their systems in the right way. So I'm going to jump into the next part, which is actually another exercise where we follow along. You follow along with me, and what we're gonna do is use the same framework we just talked about: organize, automate, analyze, optimize, and talk about how Baselane can help you with this. And we're going to do an exercise together where we're going to you're going to create a Baselane account for free. You're going to upload some dummy data I'm going to send you, and then we're going to analyze real financial statements together of like historical property data to find out how to analyze that cash flow, how to find issues, and how to act on those issues. There's some comments here, and I don't know if I should pause really quickly. Okay, that was just it. Yep, no problem.
I think you're all set.
Awesome, cool. So this is quite simple, like the way that we, teach the methodology: organize, open a separate business checking account. Andrew, I don't know if you already did that for your rental, but if you're planning on it, this is one of the first steps you should take care of. Set up your virtual accounts, open your virtual cards, for example. And we'll talk a little bit about this, but these are some of those just housekeeping things to do when you're getting your rental business ready to scale. Automate your rent collection, automate your bookkeeping and the rules that use to auto tag the properties. We'll talk about that. And then, the rules will take care of the recurring transactions as well. And then analyze. This is the part I'm going to focus more on today. How do you analyze something when you have actual data in the system? And what do you do with it is the optimized part that we're going to talk about. Awesome. So let me get back into, so this is the theory part. This is the last part of the theory. So really, it's super focused on actually doing this. So what I'd like everybody to do is, I think the link is there, but go ahead to this page. Again, if you already have an account, you can just log in, and the data I'm going to give you, you're going to be able to delete it as well. So don't worry about that. We're going to upload it. And if you want to get rid of it, we can delete it quickly. If you're new to Baselane, create this account, because what I'm going to show you is how to actually analyze properties. And if you haven't set anything up on Baselane, no worries. We're going to just do a about 15-minute exercise together, and then you'll understand the power of it, and then up to you how you use it from there, right?
I put the
So
link in the chat,
yeah,
as well as how do you
awesome.
Mishta put it in
Mishta.
there as well.
Yeah, perfect. Okay, so I can't see everybody, and I'm not sure if others are following along, but this is a hands-on exercise. So again, we encourage you to follow us. And so here, I'm going to just actually do this with my email, just to show you how it actually happens. And just follow along with me as we go through the whole thing here. Okay, so I've just created a request to put an account. How many rentals do I have? This is just some information that helps us understand who you are. How many LLCs do I have? Just one for now. How did you hear about us? So for example, here I can say Dustin here, or you can also do it here. This helps you get some of the features that we talked about earlier, like the premium support and things like that. I'm going to create quickly a password here. Awesome. Continue. Oh, let's see if that worked. Oh, this is email is already in existence. Whoops. All right, so I'm going to just create a new one. All right. So I've now just created my account. I'm going to go to, if you're with me here, click the set up bookkeepings and analytics option only for now. Okay, so there's some informational stuff here. Banking built for real estate investors with organization and high APY, real-time accurate bookkeeping, all the finances in one place. I'm going to skip this for now, but this is normally what we recommend you do if you haven't created a banking account already. And then we go to bookkeeping. So for now, I'm going to continue without it. Set up later. Okay, if you already had a Baselane account and you're just logging in, just go ahead and navigate to the property section for me. If you are new to this, just follow me here and just go to the properties page, just like I am doing on my screen here. Okay, awesome. So I'd love to get some comments of just letting me know if you're with me. And our folks are going to send you a Google Sheet you're going to download as a CSV onto your computer. So Mishta or Larissa will send that right now. And that's going to be useful very soon, but I just want you to have that ready. And now what we're going to do, what we're going to do is add a few properties. And the names of these are important. So I'm going to quickly pull the names here. Actually, you know what? In a way, it doesn't really matter because we're going to do the mapping anyway. So I'm just going to call this property A, LTR number 1. And you can put whatever address you want. It doesn't really matter for this exercise. You can delete these later. Okay, that's the first property. I'm going to create another property, call it property B, LTR number 2. Single family. Again, I'm just picking random addresses for now, just for this exercise. Okay, that's been created. And you can set up rent collection right away. You can set up financial metrics for these properties that you can, follow along so you know where you stand with your mortgage and your valuation. All those things are in here for you to really run this like a pro. And this is going to be property C. We're going to call this STR number 1. And again, I'm kind of just picking random addresses. Doesn't really matter for this exercise. Okay. Yep. Awesome. So now what I've done is I've created 3 properties. The reason this is important is everything basically is built off of properties. And everything that we do connects back to a property. And you can add multifamily as well, or room rental type stuff. So for example, if it's a duplex and you want to have separate units, you can do all of that down here. We're not doing that right now, but you can have all this flexibility as well. Okay, so this is the part of adding the properties. And we're going to be doing a bookkeeping exercise together. So I'm going to go to my transaction ledger. Now you can connect existing accounts and auto import data That's one way to set up all the accounts on Baselane by going here. But what we're doing today is a manual upload just to show you the power of Baselane, and it's really something to show you in 5 minutes what it does. So I'm going to go here where I just went to import in the transaction section, and I'm doing a CSV import. And so you remember that file that we had sent you, this is the file you want to download into your computer, and we're about to upload it into Baselane. And if you have real data from 2-3 years back, you can do this with your properties as well and pull all of this in.
So a quick question. So that download, it would be like a template if we need to format whatever we have in another Excel sheet.
Correct. You can use that to add addresses to it, property names, and other like the right expense categories, but absolutely, yeah, that's the format. And so here you can see the columns are nicely mapped to the description. And then there are some things we have to add manual tagging mapping to because there's multiple options for some of these options. So for example, mortgage interest was one of the expense items in my spreadsheet. I have to go in here and find mortgage interest. I just did that. Legal and professional, same thing. It's can have multiple subcategories, so I'm just selecting the top one. Mortgage principal, same thing. I have to map it to the actual mortgage principal payments. And then rent, again, there's many types of rents. There could be long-term, short-term, but we're just going to do the main rent one right here. So now we just basically, for the recording as well, we just mapped everything from the spreadsheet, all the categories that we had in there to real categories in Baselane, one-to-one. And so this is going to make the import super easy. Continue. Now mapping my properties. So remember we added those properties. So property A is for the long-term number 1. Property B is for the long number 2. And property C is for the short-term number 1. This is, you can even mix it, but it really just to all stay together. That was the purpose of it. And you can see that we've got everything connected. And I'm going to continue and import 177 rows of transactions for all those properties. So here you go. It's being imported, and there it is, right? So it's all here. Now, there's one more step in here to actually map the properties because I think this is a demo account and it's not tagging it. And so if you have a real account, this may already be happening for you. But basically, if you look at the data here, I have comments in here that basically say that this is a CSV import. And it has the, if you look at it here, it has the description of property A, B, or C in here. So what I'm basically going to do is quickly look for property A in the transaction description. And you can search for anything. I'm just getting you familiar with Baselane. You can search for anything like this, Home Depot, right? Plumbing expenses, whatever that you want to look for in Baselane, you can search for it. But here I'm going to show you another feature, which is the ability to to quickly tag everything in one go. So here, we've got all this stuff, all these categories are there. I'm going to edit and map this to property A, which was long-term rental number 1. And so now everything is tagged to that one. There you go. Now I'm going to just do the property B. And instead of like an entire weekend of work, you'll see we'll be done in like 5 minutes here, no more. I'm going to tag all of these to, there's actually more of these, so just let's see all of them. And I'm going to select all here, and I'm tagging this to property B, which was number 2. And then last one was C. And searching for it, and here we go. That's everything. And now I'm basically mapping everything here to manually say I want all of this to go to the short-term rental mapping. Okay, there we go. So now the point of this is just to show you how to use the data. So that's where auto importing, but you also get a feel of how to use Baselane and how to interact with some of the features. You can do split payments. You can digitize your receipts in here. There's all kinds of filters in here that you can do. You can export all of this. All of that is available for you. The exciting part. So now we actually have real data in here. And if you're following along with me, I would like you to go ahead and pick this property, the STR number 1. We're going to just do an exercise together. So we're going to pick one of these. And I'm going to do last 12 months to look at more data. And now we have a bunch of information in here you can see. And what I'm looking for is all the financial wizards on the call. Help me analyze this property and let me know. Oh, in fact, actually, I'm going to switch to another account because I've updated some things in here. And I wanted to show you sort of like how to catch some things. So give me 1 second. I want to move to another account really quick here. So that was just to show you how to import everything. Now I'm going to sign into a demo account with another piece of data that we had to show you like the ability to analyze. Awesome. Okay, so same deal. Everything is the same. Haven't changed much. I'm just switching accounts. And I picked that same rental property that we were looking at. It's just called something different here already. And I'm going to do it by months, and I'm going to pick this one. Apply. So you can see visually what's going on with this property. Can anybody notice anything weird already? The dark blue is rent. The light blue is expenses. Can anybody see anything weird happening? Feel free to comment in the chat. And actually, it's easier to see it sometimes this way. Sometimes it's easier. It depends on who you are. Sometimes it's easier to see it this way. But I'm going to just leave it this for a second. Can anybody tell me what are some things that you notice that are odd on this property? So let's start with rents. We'll do it together. So let's start with rents. And ignore June because we didn't have any data for June. So let's start with July. So what do you think is odd that's happening so far? Oh yeah, yeah, Dustin's got it. Yeah, exactly. So basically we're missing 2 months of rent over here, right? So as you get more properties, this becomes another issue. Like it's harder to notice, and then you have to analyze this stuff. Even with a few properties, it becomes a problem. But we're missing rents in here, right? So what happened to September rents? There's nothing in here. And so this might be a bookkeeping error. This might be that you actually didn't get the money, you didn't get paid. If you were collecting rent on Baselane, you would get those alerts and a dashboard that shows you, hey, like how you have overdue stuff that wasn't paid, for example. Because that's exactly right. There's things that are wrong with this property, and we can see that in the table here, right? As I just demonstrated. Let me just go back to this one. So missing rents. Okay, what else do you notice? Is there anything else that's off that you're noticing in the, let's say, in the expenses sections? And I would love more participation from people that are not Dustin. um, Terry, Brandon, repairs and advertising. Okay, what are you noticing about repairs and advertising? Okay, yeah, there's a big repair over here, 1250, right? Oh, sorry, I clicked on the wrong one. Why is there a huge repair over here, right? It killed my monthly. And, we could see like, oh, well, that was advertising. I clicked on the wrong one. But there was a big repair over here for 1250. Yeah, you could say, hey, what happened? Like, what is this repair for? Why did this happen? You can analyze it. We'll come back to like different scenarios, but that's a good catch. Yes. Um, Anybody notice anything else? I'll give you a hint. Look at utilities. Remember, this is a short-term rental. We're missing some rents here, so that might be bookkeeping error, or maybe they went to the wrong account or something. We have to figure that out, right? We're in the winter season now. Look, November, December, January, the rents have gone down over here. Maybe it's a summer booking. But what are you noticing with the utilities? Okay, I'm gonna just give you the answer for a purpose of time. So what's happening is there's a huge utility spike over here, right? And you wouldn't notice that until you had your bookkeeping up to date and you were watching it. And you can see here, there's $1,000 expense for some utility. And ideally, if it's a real transaction, you would know what the vendor is and you can drill down on who it is and contact them and figure out what happened here. Maybe you're leaking water. Maybe the heat was blasting, even if it's unoccupied and you weren't controlling the thermostat, right? There could be a lot of reasons for why this is going on, and then you have to figure out how to like remedy the issue, right? So these are just some examples. And here's another example in terms of just like management fee. Does anybody notice what's going on in the management fee, right? Normally, it looks like it's related to revenue, as you can see here. but then we got charged management fees with no rent. That's an issue. And then in April, $3,200, and maybe it's 10%, it should be 320. It's $2,495. Like, why did I get a huge management fee bill? Another thing to look at, right? Did they just do a big repair and then bill it to me with a property manager, or was this like some fee that they charged that you didn't expect? Like, what happened over here? You can see it killed your NOI for the month. And so this is like a type of analysis you can do for an individual property. Again, you can flip to the chart, you can drill down on it, you can pick the month. For example, the one with this huge one right here, and realize, oh, it's management fee. Okay, what is it? And then you can see all the composition and figure out what to do from there. The next one that I want to show you, which is the last one for now, is the side-by-side analysis. And now we're actually doing that analyze part. Remember we said organize, automate, analyze. We're talking about the analyze part. And so what we're now doing is looking at it by property side by side to see which one is doing better, worse, and how it's going. So here's the view. We have the 2 long-term and a short-term. Here's the rents for each one for the last 12 months. And here's a bunch of numbers. So what are you guys noticing in terms of NOI? What's the number one performing property so far based on NOI? It would be this one right here, the long term. That's surprising. So something is going on, which means your costs are way too high for your short term. Maybe your rents are too low. Maybe you didn't have the right strategy, but your operating costs are too high, and you're not making enough money there. But you are actually doing really well in your long term, whichever property this is, and you probably want to figure out how to do more of that, right? Again, these are dummy data examples, and you'd have to like really have your numbers in here. Then we look at the debt service. We look at some interest and principal payments. Net. How are we doing, right? So $6,000 with the long term. Second long term is $2,500 for the year, and the short term rental is actually in the red. If you were doing this in the middle of the year, you'd find that out. You'd figure out what's going on and make some adjustments, right? And so this is the kind of stuff you want to avoid doing when you're doing your taxes at the end of the year. You want to do this monthly. So you look at your books every month, you compare across all your properties, you notice any anomalies, you remedy those things, and then you make sure that you're not losing money in the middle of the year. So going back to sort of our concept of organize, automate, analyze, optimize, we just did some type of automation and analyzation of all the different types of results. And you can export this and save it down in your files. You can share it with your partners. You can send it to your lenders, your CPAs, and so on. There's a tax package you can export here. There's different type of reports. So yeah, that's the idea here, is like analyze your cash flow. So going back to this, how do you automate? We didn't really talk about some of these things very quickly. With automation, with Baselane, you can set up different types of banking accounts. With Andrew's example, he's doing a long term, so probably makes sense to open up an account like this. I opened up a brand new account. This is a demo account. Andrew, you had that vacancy that you were talking about. You had a vacancy reserve. So you can have a reserve right here. That's your vacancy, right? And you can tag it to a property. Let's say it's this one. And this is the kind of stuff that you want to do up front. You don't want to wait for this to be done later and then get caught behind on this. And this is going to create an account for you. Now, what you can do is, as you're collecting rents, you can route money from here automatically to here every month. You can set up a rule for that, and that's in the move money section. If you had a maintenance reserve, which I saw that you also had, you could do another one. If you want to do a security deposit, you can create a checking or savings security deposits account to park your security deposit the right way. Let's just connect it to that property again. And there you go. When you collect the security deposit, you can deposit it here. If you're saving for a new deal, you can add a new deal fund and so on. You can also create virtual debit cards for different purposes like paying utilities or cleaning or repairs, and issue that to your team, or use that in your apps to pay folks that you're using. So that's another thing you can do here. Lots more functionality in here in terms of sending money by wires, ACH, and so on. Wires are still free. ACH is free. You can order checks for a small fee and things like that. So anyway, so that's how you like organize your banking. This is just an example of long term. Somebody had mentioned, I think, short term. Here's an example of a beach house account where you can set up different types of sub accounts. You can connect money straight from Airbnb into a account like this. You can then pay your mortgage and expenses from here, and you can set up these other accounts you need. This is just a sample. If you have multiple listings, you can do multiple listings sub accounts as well. And then again, if you're collecting rent, very simple. You can collect rent from here, connect it to your Baselane bank account, and it'll auto tag the rents. And the last thing I'll mention is in terms of the bookkeeping, which is the new thing that we're launching in July, is that it's going to learn from your behavior and also auto tag using our LLM and AI models and machine learning models to enrich the categorization. And so as you can see, I had just automatically uploaded this. But if you connect transactions or upload it, it'll learn from it and over time improve it and also give you recommendations of what the tagging should be, and you can improve it. So for example, again, this was an exercise with dummy data, but look, you got all these things to review to make sure they're correct. For example, property taxes, property B, this is categorized as taxes, that's correct. Boom, right? This is a mortgage principal, that's tagged as principal, that's correct, for example. It'll also auto-create rules for you based on what you've been doing, and you can verify those rules. Or you can set up your own rules and, for example, like this, and tailor them. For example, if you're doing repairs on Airbnbs and you pay, you know, some guy named John Doe, right? I'm just making this up. And that's what comes up in the transaction. You can say, anytime John Doe appears, I know what it is. It's for that vacation rental in Florida. I want you to tag it as John Doe, right? And I want you to map it to this property and want to call it repairs. And, you know, in terms of accounts that it's related to, you can say it's an account. Remember, we had created all those like bank accounts, as you saw earlier. We can just connect it to a bank account and pay from there, and boom.
How did you get to
Now
that? Oh, it's in, like, I see
this
the
is,
create a rule, but where's that at?
yeah, this is in beta, so a lot of folks in the real accounts won't see this yet because this is not fully rolled out. But it's if you are in the beta, it's under manage rules and create rules and setting this up. And this is the part that takes you like from 75% automation to like almost 100. Because if you spend 5-10 minutes on this, figure out the stuff that's a little bit more complex that the AI will never know, right? Like if you bought something from Amazon, like I have no idea what that's for, right? If you have some random description in your transaction that I can't figure out what that payment is or the merchant record, or maybe you transfer money to a credit union and that's how you pay your mortgage, the AI is not going to know that that transfer is for your mortgage. They have no idea. That's what I do. And so I'm basically, and if I have a transfer to X, I know that rule is for paying mortgage for property A, and it auto tags it for me, right? So if you do these two things, this is rolling out in July in our pro tier, I think roughly July timeframe. This is going to be super powerful to automate everything that you do so that when you log in, you're checking and just doing this. Yeah, this is right. This is right. Over time, you don't need to do this because it's going to get smarter. And then you're really spending more time here where we want you to spend more time analyzing and optimizing your portfolio. And so let me just pause here. We covered a lot of concepts on organize, automate, analyze, optimize. What we really want you to achieve is the ability to go from, you know, more rent collected on time, lower your expenses, increase your NOI, that increases your returns, less time spent on all the admin work that you're doing every month, and then, you know, have the right emergency earnings fund set up so you're earning on that while it's setting aside, right? Do those things to not waste the opportunity. And so that's what we want you to achieve. And then you'll see that spreadsheet that we gave you here, you can actually do that. You can go from where you're at today, put a bunch of numbers in here, and then put after, like, let's say a month or two later, and let us know how that went, right? Like, did that actually help you move the needle on your properties? So yeah, that's the overall presentation. And again, if you haven't done it already, go ahead and go sign up. This is Dustin's link, and it'll take you to the page that we're partnered with Dustin on, and you'll get the special features through this and a sign up bonus. I know we're way over, but I'm happy to stay for like another 10 minutes to go take any questions.
And remember, when you use that link, you also get the premium support too, which is just super helpful because when you're going through, you know, sending wires or, you know, you have ACH, which are wires still free?
Wires are still free. They will not be free going into Q3. They'll be $15, but that's still way cheaper than your average
$15.
wire.
I'm paying $30 right now. I just
I
paid
know.
one of the, yeah, that's great.
Yeah. Yeah, so wires are still free. ACH is free. Chase charges, like, oh, there's other banks charging for ACH. Our ACH is free. You can even set up rules to pay people automatically or move money, right? So it's really set it and forget it type approach to the finance side of things to really make it easy for you. So I hope you take advantage of that.
So I
I'm
put
happy to
that
take
link in the
questions.
chat. Who has
Yeah.
any questions? Feel free to unmute. But then also, I didn't see any other. The ladies were doing a great job with answering questions. Did you answer Terry's? I think you did. Talking about if you run all three properties through the same LLC, you have a. He's abbreviating a lot, right, Terry? Terry, you still there? Do you want to ask your question?
Or is that a statement?
It was just a statement.
Okay. Yeah.
Thanks, Terry.
That loss in the short-term rental would be a great tax write-off if you have that, if you're running all of them through the same
That's a great
LLC.
point.
Totally.
Yeah, that's awesome. Yeah, we didn't talk about that at all, but yeah, that's definitely the optimization part of it, right? Know that, but know it in the year. Don't know it in December, right? And plan it out so that if you're gonna be taking a loss, you have a plan for that. We didn't talk about a lot of other things that are more advanced, like cost seg and STRs and all of that stuff. That's a sort of a separate conversation. But yeah, great point, Terry.
Well, Baselane wouldn't have anything like cost seg in there. Would that be pretty neat if it
We
did?
don't have cost seg. What we do is if you're spending money on capital expenditures, you can track that and make sure that you're on target for that, right? So I was talking to a larger Airbnb co-host yesterday, and we were talking about how do you capture all the sort of capex level spend that you want. Because we have over 120 categories here, they're all mapped back to real estate and Schedule E. There's tons of features here for capital expenditure tracking, right? Appliances, closing costs, doors, floors, HVAC, et cetera, et cetera. So this is just more for tracking the spend. You still have to do a cost seg, which you have to hire somebody for, or some people now do it on their own, for example. But yeah, there is tracking for that, and you can then get a report on the reporting side and look at what's going on with that.
Awesome.
Yeah.
Well, we're definitely over time, but Saad, thank you so much for putting this on. And the link is in the chat if you haven't signed up yet. Get the $100 as well as the premium support included. But I'm going to have the replay out there for you guys, and we'll have Brandon will create a whole page with the write up and everything. So it'll look awesome for you to be able to get more information. We'll also grab those links too. So if you want to in the future, grab that Excel sheet or the CSV file, we'll have all those there for you as well. Anything else before we get off, Saad?
No, we'd love some feedback. Let us know how we did in the training. Thumbs up, thumbs down. It's a new concept. It's a lot more hands-on because we got feedback that people didn't want to just talk about stuff. They wanted to actually do something and try it out. And so if there's a way to make it better and simpler, love to see any feedback that we can get from you there. But the recording is there, and all the files we can provide as a follow-up, including the presentation as well. So you guys have the concepts. The spreadsheet pretty much has most of those, and the dummy data if you want to play with. Now, if you did follow along and you uploaded all that dummy data, I didn't finish this, but you can quickly delete it as well. I was just going to show you a quick trick here. So maybe just for the record here, in case anybody's following along, if you go to transactions and just type in CSV import test, as you can see, that was in the description of every single one of these. Again, this is dummy data, so you can literally select everything in here that I imported and hit the delete button right here. So that's there, in case anybody is following the recording and wants to just try this and then undo it. You can go ahead there and delete it, and then of course you can just delete all the properties you may have added inside as well, so that you have a clean account for yourself.
So
Last plug here. Yeah,
I
sorry.
was just going to say, it's super impressive that you also do the programming as well. That's pretty impressive, man.
Yeah, for sure. And last thing I'll say is we just care about helping folks with the actual optimization of this. And so that's what we're doing this. And Larissa here, she's on the call. She runs bi-weekly live demos and trainings of how to use Baselane in a deeper format. Larissa, if you want to share the link, that's another way for you to just kind of get more help if you need it and get going. The only thing I'll say is don't wait. Do it right away and start setting up your rentals for success.
Awesome.
I got
Good
a
job, guys. Thank you, Saad. That was really good training. It was much better than just you're talking through it. So I personally thought it was much better than just walking through it and talking through it. So
Yeah, for
um,
sure.
yeah, I
Was there
appreciate it.
somebody had a
What's that?
question here? I think somebody may have quite a question. Sorry.
Yeah,
Oh,
I was just
go ahead.
sorry. I wanted to ask a question. So, is Baselane supposed to like completely eliminate the use of like other property management software? Like, I was planning on posting my property up to Avail and then going through Avail.com using it for property management. But is this something that can completely replace that? Do like Baselane is a one-stop shop for
Yeah,
all property management, banking, bookkeeping? Like I
great
can do
question.
that, or not there yet.
Great question. I think it depends on what you're doing. As you saw, with something like an Avail or tons of other products like that, if you're looking to list your property and get the listing out to syndicate it, all the websites, we do not offer that today, right? So you'd have to go to a Zillow anyway, and/or an Avail or something like that to do something like this. Beyond that point, we can help you. So with, things like setting up your tenant screening, which includes the application. Our tenant screening is a lot more modern. It's got income verification and fraud checks like identity checks with selfie checks and things like that. Modern infrastructure, more data behind it on the back end to detect fraud. So you have the tenant screening, then the lease agreements. You can upload your own or get one of ours that we plug in from Rocket Lawyer. That's a 50-state customizable lease agreements. Then collect the rent, right? And so that workflow is here for you. Really, what we don't do today is the listing. Frankly, Zillow beats everybody at it, and so we didn't want to play in that game. Like, but most of the time, you have to direct list on Zillow anyway and pay the fee, and so that's what we see most folks doing. So that's why we haven't built it yet, because we're not going to be Zillow. And so you can create a screening application from Baseline and give that link in the Zillow listing, for example. From there, in terms of banking and all the bookkeeping and the reporting, as you've seen, and even all the tax reporting you need to send to your CPA, we can handle all of that for you.
All right, cool. And then so you only get one physical card, like a debit card, correct?
Correct. You can request an additional one if you need. It's a request you have to put in. Uh, Larissa's maybe able to answer that question better, but it depends on your setup.
Okay. No,
Not,
because I was just
not
wondering, so like,
live yet, but we're looking into ordering more physical debit cards. But we do offer virtual debit cards, same concept. You're putting it on your digital wallet like Apple Pay, Google Pay, used at most stores as well, if you're creating like virtual accounts. But we
Yeah.
will have the
oh, okay.
additional
That,
card ability. Mhm.
Yeah. So virtual debit cards, unlike other banks that are digital, maybe even in our space, we don't limit you on the number of accounts or the card. So you can go wild on how many you want to create. In terms of the physical one, if there's a partner involved, if there's things like that, we do allow for a second one. It's a custom request. You have to ask our support team, and we'll issue you one. And then
Mhm.
soon you'll be able to actually just provision that in the app by yourself, basically.
Oh,
That's what
okay. Yeah,
Larissa's
because I was
telling you
just
about.
wondering, like, if you have that one debit card and you have all these different checking accounts, like, how do you know
Oh,
which
well, they
account
map.
you
They
know?
map to
They
them.
do
You can
Oh,
not.
okay.
create a relationship. So basically, if you go into the cards, right, here's an example. You can actually map the accounts to the. So let's say there's a main account and I mean, these are not maybe named correctly, but there's pool edition fund. I want to create a account for a card for that. You can map it to a property first of all, right? That's one thing. And then when you create the card, let's say I'm creating a card, you can map it to that bank account. See right here. So, for example, I'm in Beach House demo, and then let's see. Oh, it's already mapped there. Let me see here. Larissa, am I doing something wrong here?
It might be because this is it's a demo account, so we might be doing like AI, but what are you
Oh,
trying to
I was trying
check?
to map it
Select
to
your
the
bank
sub account.
account. Oh,
Oh,
go back to add virtual card. Go
yeah, it
back.
wasn't letting me map to the sub account,
No,
basically.
what about the select bank account? Oh, it doesn't show it for some reason. Maybe because
Maybe
you're
in the demo.
it
Yeah,
might be
maybe
the
because I'm in the
demo.
demo, but you should be able to map to directly this sub account,
Yeah, that's weird.
and That's, oh, you know why? Because it's a savings account. That's why. I think.
Ah,
Yeah.
it
So
is.
here's the one. So
It is saving.
the checking accounts are where you can have debit cards. So you can click on this and it'll show you what's already in that account, but you can create new ones that map directly to that checking account. So what the money will come from that sub checking account to the debit card that you're creating.
All right, appreciate it. Thanks.
Love it, guys. Well,
Awesome.
thank you so much for
Great.
showing us.